Let me know if my big head gets in the way, but more so than that, it shouldn't. So first, I want to look at GameStop as a whole. This is going to be, let me see something really quick. This is the chart. Yeah, we're good. I think we're going to be good on all the slides except for like one, maybe like two away. So we're good. So this is the chart right now. And if you're looking at this chart, I want you to see right here, they have a 1, 2, and 3. That's a triple bottom, guys. If that's not bullish, I don't know what is. That means we are bouncing off of that support line and we're shooting back up. You really can't get us past down $15, $16 range. I've asked them to try. I really want them to try. I would have had an extra share if they would have did it that way. Today I put in $100, right? So let's just say I bought the stock about $100 worth, which is a good day for me. And that's 5 shares plus the carryover, about 5.5 shares. Guys, I'm not crying. I paid $91 for 5 shares. And I would tell you, that's a share and a quarter pre-split. I love the price. It's like $76 a share right now pre-split. If you guys don't understand all this terminology because you're brand new to GameStop, don't worry. All the original GameStop guys know exactly what the hell I'm talking about. But right here, when you look at this stock, you're going to see that the 52-week high is actually $34.99. It means $35. We're more than half of that right now. So in any given fiscal year, this is the truth, and you can go read about this. I don't care what you are. Stocks traditionally go anywhere in a window from a 50% jump, okay? Up and down. They can go there. You're in a 50% window. So for us to go from $35 down to 17, that's that 50% window. And now we're coming right back up to it. We can get right back to where we were as the previous intra-year high. We can do that. It's going to take a great announcement, some great earnings, and then of course, whenever Wall Street wants to stop dicking around as far as what the value of this stock really is. But for me personally, I don't care. I don't care if it gets to $30 this week, this year, this month, in the next 5 years. I don't care because the lower the price is, and this is the difference between me and everyone else out there. I'm all in into the point that I tell you this. If the price stays at $20, I'm buying it every day of the week. No matter what it is, because with that cash burn that doesn't exist, the net share equity position that exists for us, but the narrative that they're burning off cash that doesn't exist, really, it's not true. That tells me I have value in the stock that I'm buying. I'm buying a stock right now in GameStop that is almost $4.50 net equity position. No one can tell you that they're at a 20% equity position in shares, that you're buying. No one can tell you that. And if you guys don't understand that math, go do it. Go do it. Go look at a stock like Apple, and then when you see that their cash position only equates to 2% of the amount, of the share price itself, what are you really buying? You're buying the top side of a stock. You're not really buying the equity of it. So it just means that there's so much room to grow. If GameStop's $1 billion in the bank is the starting point, what's the end game? What's the end point? You might have, I was reading the details of it, and it said there's no dividend coming anytime soon because they'll decide on it. They suspended their dividend in 2019, and that was to straighten their balance sheet. And I don't know how much stronger we're going to get, but I'll tell you, you have Kohl's giving out dividends, and they only have $200 million cash in the bank. You have numerous other companies giving out dividends, and they only have $400 million in the bank. GameStop has $1.3 billion. They have a lot to give out. So if they were going to give out a quarter, if they were going to give out 50 cents, I don't care what they give out. But 50 cents is $150 million. That's nothing. That's nothing compared to the money that they have hidden in this balance sheet. I'm telling you, because I went ahead and I read it and I saw it and I was like, wow, this is amazing for us. Amazing for me personally, for me being the investor that I am. But hey, you'll see it all, and it's all going to work out perfect for the people that actually stick around for the decade or two. That'll be me. But for anyone else who just wants to get in and out, well, I'm sorry. So here we go. This is GameStop, guys. You guys are looking at it. $5.6 billion in market cap. We know that is basically equivalent to the amount of shares that they have per year. They're around 5.9, 6, and then a 5 flat in 2020 COVID. So the last 3 years, they're trading at about 1x their actual sales, right? So that's one thing. But here are the business priorities for GameStop. If you look at it, they're going to tell you, and if I don't even have to read all of these, you guys can pause the video and read them if you guys want, but I really want you guys to look at the very bottom. And it says, by executing these priorities above, we can create and compel experience for customers, a compelling experience for customers, and be positioned to invest pragmatically in growth initiatives. We can also maintain a strong balance sheet in connection with our cost reduction efforts. We expect to see favorable impacts to our selling, general, administrative (SG&A) expenses in the quarters to come as we pursue profitability. Guys, this was written right here last year at the end of the year in the 10K. It was written last year in the third quarter. GameStop lost $300 million. I'm going to show you it all. But as you see here, they're continually trying to become profitable per quarter moving forward. But did you know that all the money that's hidden is hidden in the SG&A? The SG&A is going to be about $100 million less in the first 2 quarters. It's going to be about, when I was ballparking, about $200 million less for the year. Remember that they were upside down about $300 million. So if we can come out just SG&A side, $200 million on the plus, that means we only have $100 million that we have to build back on. I'm not talking about profit, guys. I'm not talking about a Q4 profit. I'm not talking about, oh, they have to make $50 million this quarter, $50 million this quarter, $50 million. No. Just on expenses, what we call controllables, they literally are shrinking it and reversing $200 million. So to go from $300 million loss to $200 million loss, now with the amount of money they're spending, they're not spending nearly as much. They literally only have to make $100 million to be positive, a net positive position. And if I told you they already are, I don't know what else to tell you, but I'll tell you. Here's the chart. So this is GameStop. If I put in $100 on GameStop in 2018, we would all be at a net zero position right here in 2018. That's the S&P 500 and the Dow Jones. I'm going to go ahead and move myself because I know I'm blocking it. Stay right there. Give me this. All right. So put me off the screen. Now that's GME, S&P, and Dow Jones. GameStop is the big triangle just shooting up out of the sky. Boom. And we're still holding well past the movements of those 2 indexes. And why does that matter? That means because our stock is trading at $612 if you put it in 2018, and there's a 154 and 169, meaning we're outpacing the market over the last 5 years. There's 6 years. Anyone coming at you telling you this stock is falling apart or it's not holding, it's still holding true to today. Okay? The warning signs for businesses out there with like shrink problems, i.e. Target, Dollar General, you guys got to think about like Kohl's, all the individuals that are JCPenney's, all those guys have shrink problems. GameStop does not announce a shrink problem on the balance sheet itself. Therefore, their values are dollar for dollar. They're right there with Best Buy. They're right there with Walmart. And I know they probably have a shrink, but not nearly as much. It's because GameStop has controls put into place. But we'll talk about this for a second. Let's look at this. So GameStop right here in 2021 and 2022 lost $381 million and $313 million. Guys, we will be nowhere near those numbers this year. If you want to look going towards the goal line, like we're steering towards it, we have lost $49 million this year so far. $49 million. That means over the next 3 quarters, we will have to lose $260 million. You're not going to lose 80 million, 80 million, 80 million because Q4 is where we actually make a profit. In 2021, we made 86 million. In 2022, we made 50 million, 49 million. So what exactly do you think is going to happen over the next 2 quarters that we would have to lose $260 million plus? It's never going to happen. I know that. I know that GameStop is going to come out really close to zero, really close to a net zero position because of what they'll do this quarter, next quarter, and Q4. Just know that that's coming your way, but we're going to talk about it in detail. Another thing here is the SG&A, what we just talked about. I see 1.7 for the whole year for GameStop, and this is in 2021, and then I see 1.68. They only lowered it by $20 million. But what no one tells you here, right here in 2022, is that they have something hidden in here. Do you remember the deal they made with IMX, with the mutable? They actually made a pledge of $150 million. And do you know where they put that expense? They put it on SG&A. It's hidden in there. And when we pay it off on all the milestones, we only have $40 million left to pay. Once that's paid off, guys, you're going to see a flat position in SG&A. That means the $150 million that we had to pay out, Take it off the number that we owe. Take it off the number that actually sits at the bottom of the balance sheet on net loss. You think we really lost $300 million? Or maybe we were paying out things that we were setting up our infrastructure for. So here's what I call hidden figures, guys. Here's everything, and this is not everything. There's more to this than just to talk about. But as of January 28th, 2023, we have approximately $7 million in net operating loss carry forward, okay? It's a carry forward, but this is in foreign transactions and in jurisdictions. But as well as a $419 million foreign net loss, operating loss, and with no expiration date. Approximately $22 million, we don't care about that part. This is the part we care about. We also have approximately $53 million U.S. federal net operating loss carryovers acquired through the ThinkGeek acquisition that will expire in years 2023 through 2034. So there's $53 million right there that is going to expire through those years right there, through that 9-year window, 10-year window. So how much of that are we getting back, the $53 million? Once it expires off, you'll understand we won't have that operating loss. It's not going to show up on the balance sheet, but we still show it. Now, there is another part of the balance sheet that people don't know about. It's called the SAB 120. You guys can go look it up. Or is it 140? It might be 140, 120 or 140. And that actually tells you that GameStop has to put onto their balance sheet the liabilities of holding crypto by a third party, essentially. It's like what Robinhood does and Coinbase does. They actually have to put on there that they're holding third party crypto, yours, on their liability sheet. And GameStop has been hiding it for the past 2 quarters, I believe. They haven't announced how much they actually have liability-wise. And I don't know how they're getting away with that accounting practice, but from what I see, nothing has been announced yet. So if they're putting that on the liability side, I have to see it. But go look it up. It's called SAB 140, I believe, or 120. One of the two. I can't remember right now. But it's new practice, by the way. It just came into play last year. So it wasn't always around. But let's go ahead and look at this really quick. It says they actually had impairment charges of $33 million last year. Okay, and that was reflected on the SG&A as well. So $33.7 million was associated with the digital assets that they sold off. That's what they got from Mutable X. And it was under an expense of SG&A expenses. Okay, $33.7 million. Let's take that off the number. So right now I'm at $33 million. On an average of 5 over here, I'm at around $38 million that I can find this year already that we can swing in the positive, okay? We need to find $300 million. That's what I'm telling you guys. And to find $300 million, well, guess what? We only lost $50 million the first quarter. So maybe we need to find $250 million because I don't think we're going to get to that number. We're just not going to get there. Here's the next part about this. Down here on the third paragraph here, and it's written very small, and I apologize. It's going to tell you that they have impairment charge of $33.7 million. They also have $13.9 million hidden in SG&A and $14.9 hidden in SG&A. Now, all of that is coming out, but they have $43 million in acquired liabilities and other current liabilities on the consolidated balance sheet. So what does that mean? $43 million is what GameStop still has to pay out according to the milestones hit in the partnership they have with IMX. $43 million is an expense still today. Get rid of the expense, guys, when it's gone after, because it's not going to carry over past this year. They're going to pay it all off this year. When it's paid off, that's $43 million to the bottom line, that they don't have it. They don't have to show that as an expense anymore. I hope you guys are paying attention. We're talking about a $80 million swing just based off of the expenses from last year to this year off of this. That's huge. $80 million. You go ask yourself, how much did they add? How close did they get? Right? They were $300 million away, $80 million, boom. Remember, the $200 million additional that they lost, they're not going to have those losses this year. They're not having the surplus of cash flow out. They're just not doing it. They're not building an NFT marketplace. They're not buying, these fulfillment centers. They're not hiring the call center. They don't have a CEO to pay. They don't have a CFO to pay. They're not paying these annual fees. So all of this and shorting up the stores. I mean, you got to think, they cut out 36 stores in Ireland alone. GameStop averages a $1 million profit per store, but they also have SG&A tied to it. 36 stores were closed. The employees are gone, the stores are gone, and the inventory was sold off. If you look right here, assets held for sale. During the fourth quarter of fiscal year 2022, we are committed to a plan to sell our European segment consisting of warehouse buildings, land, and property, and they're carrying a value of $7.1 million. but they're actually getting $13.1 million for that. Additionally, the transaction is expected to close in third quarter, but additionally, they're getting $6.5 million right here and no impairment charges. So they're going to get $20 million next quarter. Guys, next quarter, they only lost $91 million last year. They're already going to be plus $20 million. They only have to make up $70 million. Well, guess what? The SG&A last year was $380, $370. They're going to be at the $340 range. They're going to be in the $320 range on SG&A. I'm telling you because I've already done the math. So when I tell you they're shrinking their SG&A by $60 million and they're going to have an increase of $20 million, that's an $80 million swing. What did they lose? $91 million? You mean to tell me they only have to make up $11 million? They're going to make up that $11 million in quarter four. Remember quarter four, okay? We'll just keep it going. As you see these hidden numbers within it, the hidden figures within the balance sheet, you're going to find out GameStop will eventually get rid of the $53 million that they have on the balance sheet against it. They're going to not have $33.7 million against them this year. They're not going to have this additional amount of 14.3 and 13.9, and it's not going to add up into the 43 that's left. We're talking about $150 million from January 2022 to now that they've had to pay out. If they didn't have to pay that out, guys, how close would they be? That's what Wall Street doesn't tell you. And this is why they don't tell you that. Right here. This quarter, right now, Wall Street expects GameStop to have a 50% increase versus last year. But they'll mask it and to say they're going to lose $42 million. That's the number you want to grab. The average estimate is that they're going to lose 14 cents per share. That's what they have to beat. Well, last year they lost $100 million this quarter, okay? And I'm telling $108 million if I'm not mistaken. Guys, all the numbers that I'm showing you and all the SG&A they're clearing up and all the one-time, expenses that they had at last year versus this year, I think we can get to this number. But here's what I'm telling you if they get to this number, okay? $42 million loss. That means in the first 2 quarters of this year, they've lost $92 million. Even if they do the worst of what Wall Street's saying, they're still only going to lose $100 million in the first 6 months. How in the hell are they going to lose the other $200 million that they lost last year in the next 2 quarters after that? You can't. Because Q4 is positive. Q4 is Christmas, Black Friday, you name it. They've always been positive Q4. So you're not going to lose the other $200 million they're telling you. What you're going to do is you're going to gain that $100 million back. They might be down $92 million by the time we're done with these 6 months. That's what they're telling you. That's the best case scenario for GameStop. But what I'm telling you is $92 million is zero. $92 million is zero when they have to pay out the $48 million that they have. And they have all these swings of everything falling on the balance sheet quarter 3. Quarter 3 is coming. Quarter 3 is coming. So it's easy for me to project. Do they beat out the $42 million loss? I don't need to project sales. I don't need to project what the SG&A might be for the quarter. None of that. Let's go earnings per share. I think they beat this number. I do. I think they beat this number. And at 42.8, you better hope they don't. You better hope they come in flat on that number. But know what that number is. They're gonna paint that number to be bad. And I'm telling you guys, that is phenomenal. To have a 50% increase year over year, that means you're headed in the right direction. That's the point. Look at this. This is going to be GameStop's estimated actual sales, $1.14 billion worth of sales. In this little window here, you can't go wrong. 1.13 to 1.6, somewhere in that range. And it's a cost for 50 basis point increase year over year. Any company would take that. But when you look at the next quarter, they have it increasing again. And then for the current year, they have it down from the previous year, around 30 basis points. It can be down all at once. I want to tell you it can be down all at once. But remember that the previous year, they lost $300 million and everybody said they're going bankrupt and they're terrible. They're not going to lose more than $100 million this year. It's going to be in that ballpark. It's going to be at 100 million. It's going to be at 150 million. They're going to gain 50% of it back. That was the point for this year right here. Transition to 2024 means that they're going to have a clean slate walking in. No more fulfillments. that they owe to Europe, that they owe to IMX, nothing. 2024 is a clean slate. But when you go read the fine print of the hidden figures that were within this company, just know they're sandbagging this number. They know what they're walking through. That's why they keep buying in. That's why they buy it at the bottom, and that's why they continue to hold these insiders themselves. They don't have the CEO to pay. They don't have the CFO to pay right now. So I can imagine every quarter that SG&A number comes down. Remember this, if GameStop comes in at $1.5 billion for SG&A for the year, they're going to win. They're going to win no matter what. And I'll tell you how close they're going to get. Extremely close. That's the hidden figures, guys. If you don't understand what I'm saying, run it back. Just let it sit there for you. Let it eat alive. Let it eat away at you. I'm telling you, GameStop should be doing better than 1.4 cents per share. Better than 1.2, I hope. And that's loss per share. But if they go positive, they have this thing where, it's are you excited or were you surprised? They call it the surprise rating, surprise score. The stock price will go crazy. The stock will go crazy. And I don't care. I'll hang on to it and I won't sell it. I won't sell a single damn thing. So that's what I've been looking at. That's what I've been putting together for the last couple of hours when I was digging in there, looking for the hidden numbers that I wanted to see. But like I said, guys, I'm here forever. I'm not going anywhere anytime soon. GameStop currently trading at $18.41, looking healthy. AMC, not so much. I don't care.